Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Welcome back, everybody, to another fantastic episode of Fintech Daydreaming. This episode is going to be a good one. I feel it in my bones. We're going to talk about something that I think is very interesting to all of your fintech guys out there. Namely, how on earth do you actually even get time with the decision makers, the buyers, and the key people with inside of banks? How do you sell to banks? And I think this is, for me, very interesting. And I'm hoping for you also, it's going to be very interesting. I am Paul Krogdahl. I'm going to be your host for this episode. But as always, I never take this journey alone. I always have my wingman, Ville, with me to keep me on the straight and narrow and make sure that I don't crash into the first mountain we hit. So Ville, how are you this beautiful day?
I'm doing good, doing good. It's a nice and sunny day here in Finland, or southern Finland at least, and enjoying the upcoming spring, I hope. That's a little bit hopeful to say in February, I think, but yeah, we're getting there hopefully soon. And again, I couldn't agree more that this discussion today is going to be very interesting and for another reason. You're definitely on the selling side of this conversation, but I'm actually, now that it's public information, I'm on the buying side of this because I just rejoined Nordea Bank. My period at Ericsson is now over and I'm back at Nordea. So relapsed banker, like I like to say.
Yeah, you always keep saying that you're a recovering banker, and I noticed that the pull was obviously too much for you. You didn't manage to recover. You have gone right back, and you're a banker again.
I am. It is a very addictive business, I could say, and maybe that's the reason I always kind of want to go back. But I did get a chance to work with one of my passions, which is digital currencies. So I'll be looking into the central bank digital currencies and the private side as well, as we see the regulation coming in the private sector for stable coins. This, of course, brings a lot of conversations towards the bank, and I'm looking forward to leading those conversations and creating maybe even a strategy to address all of those questions that are facing banks these days.
So you heard it here first, dear listeners. Ville, Mr. I don't care about Bitcoin, is going back to Nordea to look after digital currencies.
The regulated ones. So, I mean, technically speaking, Bitcoin is not a digital currency, so I don't know anything about it. So.
Fantastic. I love it. We're going to continue this win, lose, hate, love of Bitcoin on this podcast, and no one's ever going to convince us otherwise. Ville and I, not a follower. But that to one side, we're now going to focus in on how to sell to banks. And we've got a return guest onto this show, a good friend of Ville and myself. He's been playing around. He's been in Nordea. He's been up and down. And actually now we need to just show that fantastic fireworks that you had behind there, Ewan. But Ewan, thank you very much for joining us again, and really looking forward to this. How are you? I mean, how's life been treating you, and what's been good in your life?
Bring it on, gentlemen. Bring it on. It is wonderful to be back. It's been too long. And I now speak to you from the United Kingdom with one foot in Dubai and one foot in Oslo or Stockholm or anywhere in the Nordics. I've just back from the Nordics. It's been wonderful. And but I am now a consultant or an advisor or a practitioner. You choose one off. That's what I'm doing at the moment, and it is wonderful to be back with you.
You've joined the dark side with me.
Yes. Yeah. Well, no, see, I'm a practitioner, right? There's a big difference. Yeah, Paul. I'm a practitioner, and but one presumes that your colleagues are also, and you. I know you are. But yeah, you're practitioners versus consultants, right?
Yeah, absolutely.
Presentations versus delivery, right?
Absolutely. Hands-on, get dirty, and
that's the one.
Help the customer on the journey. Absolutely. You created a mental image for me, which is confusing me, or actually maybe concerning me a little bit. the fact that you're managing to spread as far as having one foot in Dubai and the other one in the Nordics,
Yes.
that's some gymnastics there, my friend.
That is, but it's thanks to Emirates or Qatar or whoever's available. But
Okay.
it's really interesting looking at the contrast between those two regions.
Yeah, absolutely. And I think that's going to play out into the discussion we're going to have today, because selling to the banks, I'm assuming it's not the same all over the world. You actually have to have slightly different dynamics, points of views, and ways of interacting with
Right.
banks as you travel around the world. And it's, let's be honest, it's all about building those relationships and the close, contacts that you've got. And I'm actually wondering, I mean, having, as we discussed already, been on both sides of the table, you worked at Nordea, you
Right.
worked at a number of banks. Now you are independent. Do you think that having worked in the banks has helped to shape your approach to consulting and selling to the banks?
Oh, it's most definitely, and I think at every bank I have worked at, I have been a contact. I've been someone that you want to speak to. One would hope it's because you can pretend it's because I would hope I'm a nice guy. Actually, nothing to do with that. It's all to do with the position and the influence that you may hold. So for the longest time, I have been pitched. Many, 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 many pitches, many ways, many methodologies. So that many of my colleagues in banks view this as negative. I actually always viewed it as positive, because it was a great way to learn. And I think as an executive, as someone that's responsible for getting stuff done in a bank, very, very quickly you look inward. And Ville will be recognizing and remembering this and relearning this activity, which is, you've got to focus on what's happening internally. Problem with doing that, right? Because anything that happens internal is important by definition to you, to the bank, to the people around you. Therefore, external begins to get a little bit blurry. And in many cases, a lot of the colleagues I know, they just don't ever, I mean, almost never look at what's happening externally, because why does that matter? And some of that's a confidence issue, some of that's a focus issue, but it's actually really helpful when you're hearing from vendors, I think, because you're hearing from them what they feel is important and what they are delivering to markets. I always found it a really useful way of learning. But having been in the role, I can understand how executives prefer to be approached and how they don't like to be approached. And the major realization for me, gentlemen, I was at an event a little while ago, that when I finally realized just how bad it is out there for vendors and fintechs. I say fintechs because typically you mean it's a fintech usually wants a relationship with the bank, right? And a financial technology vendor obviously wants a relationship with the bank. I met a sales dude at from a fintech. I was standing at I won't say I don't want to identify anyone, but I was standing at this event. Just kind of, I'd finished the conversation. I was looking around, and this guy came up to me. He did the navel gaze, the usual, right? He stared at my badge and he went, "Ugh." He said, "Oh no, but wait, aren't you Ewan?" I thought, "Oh, well, thank you." And he went, "Oh," he said, "Oh, you're not in Nordea anymore." I said, no. Can I help? He said, I'm from Fintech. Names that you know them. You will know them, right? They're the well-known Fintech in Europe. I said, all right, how's your day going? He says, really, really bad, really bad. Have you seen any banks at all? I said, well, I'm sure Danske will be around because so-and-so will be around, DNBs. I'm sure I saw. Where? And the poor chap, he's been running around this event, sales guy. Right, that's his life. I said, look, if you really, really want to get in touch with banks, right, and the right individuals, I think are here for your product, speak to the organizer. I talk to them. There's no pay for play, certainly not in the Nordics, right? But there's influence, right? You may want. There's still time. This is day one of 3. You still sponsor something. Just 2,000 euro. Sponsor something. And then, I'm sure the organizer will want to connect you. Chap says, no, haven't got any money. I said, what? He said, I don't have any budget. We spent 400,000 on a website. Oh. So there you go, gentlemen. I'm like, sorry. Hold on a minute. Who authorized spending 400K on a website, and then they sent you here? Yeah, I've got to get 10 leads. What? I need to get 10 leads from this event. 10 banks. Do you know? Can you help me? Well, right. There's a way more efficient way of doing this, and that's so. I'm just astonished at how bad. And I do mean bad, bold, italics, underlined, how bad fintechs are at selling to banks, right? Especially when it's business critical to them. So there you go, gentlemen. It's a thorn in my side, okay, that I feel so frustrated for the marketplace and for these fintechs, and then by the way, for the bankers as well, who are having to, be exposed to this desperation. It's really poor, and I see a huge disconnect. I think it's poor that I see a huge disconnect between the sales team, the marketing team, the executive team. This is the executive team's problem at the fintech. Huge disconnect between all of these, and then it's a terrible experience for everybody else.
But I think to a certain degree, it's also driven by the fact that a lot of fintechs come from a technology background, not from a banking background. They
Yes.
don't understand that the main driver for any bank is compliance, it's regulation.
Right.
And if you're trying to sell technology for technology's sake to a bank, you're on a losing streak from day one, aren't you?
Yes. Look, the misunderstanding, the fundamental misunderstanding of how banks work and buy, I find breathtaking. I think there is, a lot of truth to what you say, a complete fact in many cases that, these are technologists. But when I say, look, by the way, how do you pitch this? What's the business model? And routinely, I pull the string, gentlemen, right? I pull the string by saying, okay, say some more. Yeah, say some more. Okay, why? Why is there a setup fee? They go, no, there's a setup fee. Yes, no, sorry. Okay. Why? No, there's a setup fee. Just why is that? Well, we've got to set it up. We've got to set it up. It's cloud-based, right? You just press a button, right? Ville wants it. You're just going to go create new instance, call it Nordea, and then send them a username and password, right? No, but there is a set. Yeah, we've got to establish the instance. It's a setup fee, right? But I know, so does the banker, right? So does Ville. We know it's 3 seconds, 10 minutes. Why is it $200,000? Oh, and when I'm in the room with these guys and I'm pulling that string to see where it ends, and these are very, very, very nice, well-meaning people. Someone somewhere with an MBA will say, they've got money. Sorry? They've got money. They've got budget. It says who? Well, we've looked at their balance sheets. We've looked at their balance sheet. They made X billion profit last year. Okay. Right? Doesn't mean they have budget for a setup fee. And then when you're saying per loan, you want to charge them a percentage off the loan amount. Yes. Right. Okay. So what are you smoking, gentlemen, ladies? What are you? What? Oh no, that's because it's our shared risk. Shared risk. I see it. So it's a general. Having been in these meetings where these fintech present this, and if I am very, very fortunate to have been in meetings with very, very good, serious banking colleagues. I am not a banker, right? But my colleagues are very, very have always been really good. I've been very fortunate, and I have to. They have been very good when they're pitched this absolute AAA nonsense from these vendors. Shared risk. Sorry, don't use the phrase shared risk. This is the bank you're talking about. Are you putting up half the money for the loan? Are you going to take half of the fallout if it goes bad? No. We just want 3%. Why? Well, that's our model. Why? That's our model. Okay. Well, how much is it? And because the amount of times I've come into a fintech, I said, look, just go to them and just say it's 10K a month. It's 10K a week. It's 500,000 a month. Just give them a fixed. They're going to want a fixed fee. Why? Because their transaction, they're per transaction. Oh my God, jeez. No, but that's not how their budgets work. Oh, Right. So the amount of times I've been in these meetings, I'm the guy saying, look, you might want to think about it. It's like a fixed model or something like this, or, and success fee is rarely do they like this, right? You think of it, they'll do the pitch, it goes horribly wrong, and then they come back and say, so yeah, they actually, yeah, they wanted fixed. Oh, did they? Did they? So there you go, gents. I have no skin beyond the fact that I obviously advise and work with banks and fintechs, but I don't have a skin in the game at the moment because I'm not working or not in a bank like Ville, but or in a fintech either. I am astonished, absolutely astonished that in this day, in this age, right now, fintechs and financial technology vendors are failing to get into banks.
They are, and I'm just kind of confirming what you just said there, Ewan, from a banker's perspective. Now that I've been there back for a week, but I do have 5 years in my background, of course, with Nordea. So again, the understanding where the banks are, what are the real problems, is key, of course, as you would expect for any kind of sales opportunity. And to confirm also what Paul said is that. What many fintechs don't really understand and appreciate to enough extent is that a lot of the things in banking are not technical problems. So
Right.
they do believe that technology can solve everything, and this is more prevalent in the whole crypto and blockchain space for sure than maybe anything else, because they think that just by throwing a distributed database at a problem, it will be suddenly disappear and solve all the trust and risk issues,
Right.
which of course couldn't be further from the truth. So while there is merit for technology, of course, it's critical to understand what are you actually dealing with, well, how does the actual system work, and where the pain points are. And again, I don't want to take this to a blockchain discussion, but again, it's that part that the technology solves is ultimately fairly small. Another point, Ewan, that you made, I also want to kind of reflect is the being on the buying side of this equation in most cases in banks. The sheer volume of contacts you get makes it almost impossible to kind of, I mean, it's literally a fire hose of sales calls, cold calls. I cannot even answer my phone anymore if it's an unknown number these days, because I know it's either a cold call or a scammer calling me. So again, it is picking the ones that are interesting, that you can actually learn from, is the tricky part from the buyer's side. Right. And if you're on the selling side of this equation, you also need to respect that fact that probably these people are getting contacted dozens of times a day, and most of those just have to be ignored. So kind of how do you differentiate yourself from that noise is critical.
I find it astonishing. I find it absolutely astonishing that when I do talk to fintech and I explain this, I think it's really helpful, Ville, that you are saying this, right? To remind everybody that it is a fire hose, right? And the reason it's a fire hose is because any fintech in Northern Europe, by default, is looking to sell to Nordea, for example, right? And Deutsche and UBS and so on. Right? And if you speak to many fintech, they'll say, look, we're targeting 20 banks in Europe, or 10 banks or 40 banks or whatever, right? And that sounds really cool. But then when we say targeting, what exactly do you mean by that? They go, well, it's in-mail, right? In-mail, or right, because we can just send the message, and in many cases, these individuals, these sales individuals, they've got their 10 credits or whatever, right? Or unlimited in some cases, right? And they're looking at your profile, and they're just thinking, oh my gosh, today is the day. Today is the day. I'm gonna, dear Ville, hello, hi, I'm a massive fan of your podcast. Massive fan of your podcast. You look like someone who would like some blockchain-enabled loan technology for CDBCs. Please call me, and it's amazing, and it's very impressive. Send. And then they're, fingers crossed. Goodness me. Now, look, you've just heard, which I think is really valuable, Ville. Just heard multiple times a day you're getting those, right? Or someone says, I've got his number. Or, he came to this event. We've got his number. And they call it a lead, gentlemen. They call it a lead, which I think is very misleading, right? I've got it's a lead. I've got Ville. Okay, right. So what do you plan to do with that? Well, first of all, we're going to add him to the newsletter. Okay, that's helpful. Right, that's another one that he just goes delete. Did it originate from Nordea? No, goes into this bucket, right? Because he's got real jobs, right? He's got a real job to do. I think the other key issue here is them assuming you are a lead, Ville, right? Because I've got his direct, no, I've got his direct number. No, Ville, I've got I've got his direct number. Yeah. Goodness me, okay, here we go. I've got the number. Yeah, right. Type it in. Are you ready? Voicemail. Right? Hello, Ville. I'm calling from. So all of my work and activity when it comes to this is to talk through, having been the guy screaming for the last few minutes. All of my work with fintechs in this case, I'm no sales biz dev guy. It frustrates me massively. So I do have some solutions, and I want to try them on you guys and see how you react to them. For example, everything I'm saying to fintechs is, look, could you just I do this kind of handshake on Teams, right? That's what it's about, right? I put my hands together and say, this the only thing we care about, right? If you want to speak to Ville at Nordea, right? Okay. Now he has a limited amount of time to deal with you because he's been paid by Nordea, right? Okay. Part of his role is to understand what's happening in the market. Okay, so there's an opening. Okay, that's part of his role. Most executives, right? Part of their job is to understand what's moving. Okay, right. So how do we handshake? How do we get you in the room with him? What will it take? And usually the first couple of minutes, it's just about email, LinkedIn, email. We can spam him, we can phone him. If we call him at 4 p.m. on a Friday, maybe he'll pick up. He might think it's someone else. We try and get him. No. Hold on a minute, right? What interests him? How can you get in the room? What conference is he going to? Right? If he's going to a conference, he's obviously open, right? He's there to speak, right? And maybe you might want to ask a question. Right, I know this sounds a little bit premeditated here, but when Ville finishes his presentation, his awesome presentation on the next gen CDBCs, right? You might want to be there when he says, "And any questions?" And when this often the Nordics, very very polite audience, it just kind of sits in silence. You, Mr. Salesman, you might want to be the guy that says, "Hey, Ville, how do you what do you think about the so and so?" Right, help him out, okay? Because right, Ville goes, thank you for asking a sensible question. Now let me answer that, okay? And then 10 minutes later, Ville is going to be there'll be throngs of people wanting to speak to him after the conference, after his speech, but he may actually be very thankful for you to actually for asking that question. Maybe he gives you a few minutes and learns and listens, right? Maybe he wants to participate in some round tables. Because guess what? Ville does round tables. He does round tables, he does breakfast briefings, stuff that is important to him, right? He will do for his role, right? So how can you create those situations where you put yourself in front of him? So that's what when I'm working with these fintech, I'm going through and discussing these kind of ideas. How can you stop spamming, right? Stop throwing stuff at these guys, right? They're very busy, and start understanding them. And then, how do you get in the room somewhere to have that dialogue with Ville? And there's techniques and ideas and so on. But I wonder how you react, Ville, to that.
So that's probably the best way to do that. So again, trying to connect on a level that is not immediately related to the kind of sales pitch that you're going to be making. Because that's another thing that at least myself, I can only speak from my personal perspective, is that I'm quite allergic to, as soon as I learn or I kind of get the feeling that, okay, this is a sales pitch. So it's like, you kind of, even if it's not explicitly stated in the approach that they take, you say, okay, this person is from this and that company, and then you can kind of see it between the lines that, okay, I know where this is going. So you kind of get a little bit of a negative feeling from that. So nobody wants to be sold to. I think that's a universal truth. So if you do get the feeling that you're being taken for a ride, or you're trying to get somebody's trying to convince you on something that you're not ready to absorb, or you're not interested in it, at least initially, then you will have automatically a negative attitude towards that. And this has nothing to do with the person. This has nothing to do, not even with the product or solution that they're selling. It is really this kind of almost like, well, intuitive reaction to this somebody's trying to convince you of something thing. So yeah, you can take those psychological aspects into account for sure when you are approaching people. But to your point, Ewan, I think that's the right way. So connecting on a professional level, then kind of giving the opportunity to speak about the topics that you care about, and then listening. I think that's the kind of listening. What is this person saying? How can I relate to that? And then connecting on that level. That's a good start on any kind of occasion. And of course, mentioning the podcast doesn't it's not a problem either. I think that's a good thing always.
I can actually add another dimension to this as we're sort of talking about helping the fintechs on this journey. Coming from having sat on the vendor side, the consulting side, but working within sort of very large consulting organizations, you know, IBM, etc. We also end up in a situation where the fintechs will reach out to us, hoping that we will open doors for them at the banks.
Right.
Almost as us being a sales channel. But we end up in exactly the same dimension because we have a large number of fintechs contacting us, believing they've got something very unique and trying to turn us into the sales face towards the bank.
Yes.
But at the end of the day, it's all about relationship. It's all about building a relationship. So the last thing that a account manager at Accenture or IBM or any other large consulting organization wants to do is to suddenly bring a toolbox of fintechs and say, here, let me open up the bag and show you all the fintechs that I'm opening up the door for. Yeah, I mean, it's not going to happen. It's even the consultants get almost allergic about it because they want to maintain their relationship, their trust, and you know what they deliver to the bank. So it's almost an issue for the fintechs. They can't really go through a large consulting organization either, unless again they need to have this, like you're saying, don't sell, build the relationship and find the correct way of building that dynamic with the person that you're hoping to have a relationship with and make it a win-win.
I have to say, Paul, I've worked with Paul, or I've worked with both of you, but in the context of a commercial relationship, Paul, you're a taskmaster, or as we say, a past master at this stuff. You are amazing at it, because you know, I remember being ultra stressed as that guy at one particular bank, and then you know on the phone emailing, Paul, can you help? Can you help with this? Right, yeah, I need some any advice. Can you help? Do you know anyone? Right, you know, we're thinking of doing this event. Could you be there? You know, and then Paul said, "Oh, yeah, look, you might want to think about yes, no, that fantastic. Yes, please. Can you connect us?" Right, and it's about doing that. You created that relationship with me, right? Which I think was and of course I was open to it, and then I'm open to it for two reasons. One, because you're sitting in front of me and being sensible, right? And you aren't selling me IBM AS400s, right? You know, from the minute we start speaking, and two, because you took time to understand my challenges, issues. Yeah, the large brand opens the door, of course, right? Okay, this is the guy, for example, from IBM or from Accenture or wherever, right? That adds instant credibility, right? And in my position, one of the things I have to do is interact with, you know, big brands, big partners, strategic partners. But then, you know, I think the way that you brought that interactivity, that listening, very, very important to listen, and then being responsive when I'm calling, and when I'm, you know, I remember speaking to many of my teams. Oh, Paul, let's go talk to Paul. He can help us, right? And in many cases, it wasn't a direct, "Hi there, Paul. Can we buy a thing from you?" It was a thing that we were doing that we wanted to involve you in, get your perspective. But you know, I'm saying, "Oh, Paul," you know, I'm saying, "Talk to Paul," right? And telling my team, "Talk to him, reach out to him. I'll send him a note." Why I'm doing that is because I've had those initial interactions with you. I think, oh no, you know, I understood that you understand the game, the process here. So yeah, I think that was really, really well done when we were working together, Paul. I wonder how do you react when you see a lot of this kind of standard salesy stuff happening? Because it looks to me as though many of these companies, they're stressed and they're wondering why stuff isn't working. Yeah, you must see this happening a lot in the marketplace. How do you react to it?
I see it happening all the time, and you know, if we're actually sort of fully transparent here, both of you I met through starting with a vendor bank relationship, right? And I've always believed that you don't sell by being selly, you sell by being a relationship person. You build
Right.
trust and a relationship, and out of the back of that, you'll get a much better opportunity to sell. And you know, I don't think I ever sold to any of you two
No.
at any point in time, but we've done some fantastic things together. But I also think,
How,
you know, having go on, Ewan.
sorry. I wanted to ask you there, Paul. How do you like that? That's a learning. Yeah, that's a process. You were given top cover to do the relationship thing,
Yes.
right? Because in many cases, I see today, like I've just come back from Stockholm FinTech Week. I met a whole lot of salespeople under immense stress, zero top cover to create relationships. You're a salesperson, you're a biz dev. Here are some crappy leads that we've got. Go and then go to this fintech event. You know, we're paying for your flight and a hotel. That's it. Just get leads, make sales, right? Come back with a bank. Come back with €1 million contract today, please. You were given the time. One imagines perhaps an education as well, Paul, on the importance of relationship. How did that happen? Yeah, how was that, if you like, facilitated or allowed to happen? Because so many of these biz dev and salespeople, I mean, they don't have that luxury.
I think the biggest difference is understanding traditional sales approaches versus relationship-based selling. And I think the large organizations, the ones that have been around long enough, understand this. You know, I used to work at IBM. IBM really understands how to do relationship-based selling. You look at some of the more fintech companies, they have more of a used car salesman's approach, right? It is
tactical. Yeah.
It's quarterly based. It is very much opportunity based. It is get out there, get the contract signed. You know, if you haven't sold something by the third meeting, then move on. The relationship is gone. And like you said, it's LinkedIn messaging, and even I get them. You know, people want to sell me developers.
Right.
3 times a day.
Have you got any development?
Yeah. We've got cheap resources in Poland. Well, actually, so do I. Right. I'd much rather use my resources in Poland than your resources in Poland.
Right.
So
And
it's
Paul, just to mention, so for the record, I never bought anything from you, Paul. So I mean, we had a good relationship, and of course, Nordea did spend some money with IBM, as most of the large banks do at some point in time. But again, I never bought anything from you. However, did that relationship help in terms of creating the trust and the kind of ground level work that is needed for actually to win these deals? Absolutely. So whenever this conversation about what we've been talking together with you, Paul, for example, comes up, I mean, that builds this ground level trust. The problem,
Ville, you didn't buy anything, and I don't think I explicitly bought anything from Paul either, right? Explicitly. However, right, I could name quite a few multi-million euro deals that Nordea did during our time buy, right? So that's and then people would ask me, "Oh, what do you think?" And I would go, "Yeah, I think that's a good idea." You know, right? You know, you weigh in with your opinion based on the interactions you've been having, and you know that then creates the win.
And here's the question towards kind of from the vendor side of this conversation. So how do you measure that? I mean, for you, Paul, for example, how was your leadership measuring your success in terms of building these relationships, and how do you quantify the value of that? Because again, going back to Ewan's point on the KPIs, on the sales leads and on the kind of volume game, those are easy to measure. Either you win or you don't. But what about this kind of softer, longer term approach? Is it measurable at all?
It is measurable, because the way you can do it is once you have outlined the relationships you've got, the people who are actually engaged in doing the selling, so on and so forth, very much like you said, Ewan, you can point to where the influence has driven a decision in a different area, right? So in many organizations, what you do is you say, well, people who are driving the relationships, they don't get measured directly on the revenue. They get measured on the revenue they influence, right? So the sales guy, very often when you sell something to a large bank, it's not a simple transactional thing. It is a relationship thing. There is a lot of openness and trust and discussions going on. So you can almost build that picture that says, we sold this opportunity to this bank. What gave us the ability to sell this were these relationships. Yes. And the bank as well will say, yes, we had Ewan tell us that this was the right way to go. Ewan has been spending his time with this person. And then you can show the relationship and the journey that built up to closing that deal. Because at the end of the day, we all know that we're in business to make money. We have to make money to feed our children, to buy our house, to have clothes on our back and everything else. So no one is trying to stop the deals. But what people are trying to do is to say, well, I'm not going to buy something unless it's direct value to me and to my organization and to the bank and everything else. And I'm going to buy it from the one that gives me the highest amount of trust and transparency in what we're doing. And that comes down to that big relationship and being able to point to, we made this deal because we've got these relationships and these are the people that help us and everything else.
I wonder, for the biz dev or sales individuals, commercial listening, this will be a very frustrating conversation because I think at various different points, especially whilst I've been talking, I can imagine people throwing stuff at the TV screen, as the phrase goes, right? Yelling out loud when they're walking the dog. But the luxury that some of the bigger players have to invest in relationships is both, I think it's certainly a luxury, but also this is how it's done in many cases, right? It's not transactional. And most of the fintech that I speak to, I have to really, really remind them saying, you're not selling Microsoft Office. You're not selling Salesforce. And I mean the basic Salesforce, $10 a user or whatever, right? This is a serious approach for the bank, right? You are selling a complete loan origination system. You're selling an AML back to front, blah, blah, blah system. You're selling a new way of creating X or Y, right? So this is, you don't phone up and say, hey, Ville, would you like to buy this? Yeah, 3 seconds. 3, 2, 1. No? Okay, but thanks, bye. Right? It takes a lot of time and attention. So therefore, why are you measuring your people based on how many sales, how many leads, what's the pipeline look like? Especially when we pull it all apart, we say, and they say, it's these 20 banks we care about. Okay, if it's those 20 banks, then what are you doing to make the relationships? And they say, no, but we're trying to sell to them. There are targets. I said, yes. So what are you doing to try and make the relationships with the people at those banks? They go, no, we're trying to get someone to pick up the phone to buy something. Yes, right. But it's a 6-month conversation minimum, right? Once you started talking, it's 6 months while they think about, right? Why are you doing it? You're not selling boxes here. And that gets quite difficult. And then a comment that I think both of you have touched on, often they said, we've got these 20 banks we want to talk to, we want to sell to this year. I said, right, but some of them might not. They might not be ready to buy this year. They may not have the budget, blah, blah. I said, yes. Well, we need to speak to them to find that out. And then exactly as I think it might have been you, Paul, that they just don't care. Do you want to buy it? No. Thanks. Buy. Done. But no, wait a minute. It's a relationship. So if they're not buying this year, that's okay. But we're investing in the relationship. This is a target bank of ours. We're investing. So maybe next year or the year after, they will purchase. But then I wonder, is this driven by the venture capitalist? Is it driven by the investor? In many cases, I think it's driven incorrectly, out of much revenue desperation from the CEO or the founders. What are you thinking?
We know it for sure, right? 99% of all fintechs are driven because they've got an ambition to IPO, right? It's grow fast. It's get to an exit point as fast as possible. And the more VCs you've got funding you, the stronger that message becomes. And the minute you're driven by, 100% growth revenue to get to an IPO or to sell, you're driven by the wrong metrics, particularly in a regulated industry like banking, which, like you said, it takes 6 to 12 months to even make a decision. And that's after you've built the relationship.
Right.
And most, when I talk to fintechs, I say you're more than happy to invest on having developers that are developing your product. They don't go and do any selling. They are there to build the product that you are trying to push to the
What's
banks.
their ROI? Yes.
Exactly.
Yeah.
At the same time, take part of that budget, a small amount, give it to one or two relationship-based business developers, and treat them in the same ethos as you would the developers. You're not going to compensate them for the sales. You're going to compensate them for building that relationship, which is the same as building the product. Don't see them as your sales guys.
Yes.
See them as your external facing developers.
Right. Yes. Yes. Fully with you.
But I'm wondering, I mean, most people learn from mistakes. So maybe you can, with your experience, share one or two where you've learned the hard way, right?
Yeah. Yeah. So I have had many hard lessons. One of which is perhaps counterintuitive to what I've just been saying. I was busy hammering the commercial director of a fintech. No one ever. This is me speaking, of course, right? No one ever buys from an in-mail, straight away. No one buys from a cold call. No one. And the chap said, actually, he's put his hand up on the call. He said, actually, we get quite a lot of. We've actually sold quite a lot from inbound, and actually from just picking up the phone. I said, what? What? So I was immensely dismissive of this. Then I've had to rephrase and reset my messaging when I'm talking to fintechs by saying, like, the vast majority, don't. You can't sell by in-mail or by picking up the phone. And actually, the mistakes that I have made, I have done just exactly as Ville is saying. Which is, it's very difficult when you've got this fire hose. Wherever you look, there are messages of people trying to speak to you, right? Incoming. And it's very easy as an executive to just go, select all, delete. Right? Select all, or just into LinkedIn, just delete. Or just ignore, right? You just let the stuff wash over you now. But quite often, I have made a mistake there. And one particular issue where I was trying to connect with a vendor, I was screaming with myself and at my colleagues, at my own idiocy, because I'm saying, haven't we got, who do we know at so and so? We've got to come on, who do we? Because we were in desperate need of a particular service, and lo and behold, I thought I'll just have a quick Google. A quick search. That's why I call searching, not Google. I'll just have a quick look. I looked in LinkedIn into my messages and just typed the company name. Sure enough, 3 messages. Hi, and you look like someone who might be interested in. Of course, I just ignored it. Right. Then I look at my inbox. Hi, Ewan. I wonder, it's interesting you were speaking about this. And wonder, oh my gosh. So having railed against it, right? I actually have got a lot of value from those meetings. And from those those messages coming in, but in many cases, I have been quite dismissive, and I think it's so I do have a healthy respect for them. Now I know I spent so many minutes going, don't do that. I firmly believe relationship is the way to go, but perhaps one of the things that keeps everyone coming is it doesn't help me then saying, oh, but it did actually work. So quite a few times I have actually bought ultimately from a LinkedIn mail. Ultimately. And now that's because in my position at Nordea, for example, I wrote a particular aspect of the job spec saying I will be out there, I will be open. So I did want to listen and learn, but the vast majority of executives don't need to or want to do that. I think the other big mistake I've made is being dismissive of the sales or the biz dev teams. Dismissive perhaps because I've been stressed, or I've underappreciated what it is they're doing, and I've had to go back and say, look, I'm really sorry. really sorry. Apologies there. Hi, yes, please let's have a conversation. What I have found difficult is once or twice someone has done me a spam mail or whatever. This is a little while ago, before we got into today's ultra firehose world, and I think someone did. They phone me or email me. And I was just very short. No, thank you. We don't need that. Thank you. Thanks very much. And then I actually realized we did need that. And I went back and said, I'm sorry, look, you're absolutely right. Can I, could we take a conversation? Have you got any time to speak this week? And the sales guy went, no, I'm very busy. Wait, like, no, hold on, I'm the buyer here. Like, I realized I was wrong. I'm sorry. So the guy went back at me going, no, I'm really busy. Sorry. I couldn't quite believe the email. So then I thought, well, I'll phone him. And so I phoned him the next day. He didn't answer my call. I'm like, he knows who I am, right? Do you know who I am? He knows. And then I leave another day going, oh my God, geez. No, we actually ended up going to the other player because he wouldn't take my call. Now, I think that's because I was never rude, but I think I'd been a little bit short. But then, we ended up not being able to do business because the guy, normally, vast majority of biz dev will understand when they get someone screaming at them, sorry, no, I don't need it. No, thank you. But then when they call back going, oh, I didn't mean that. Yeah, apologies. Can we talk? Usually they'll just bury it. But in this case, this guy made me suffer. And so much so that, I thought, should I escalate his, because again, the value of the brand, you send a message to the top guy at the company, you can as a banker, right? Or sorry, as any big company, right? Say, hey, look, I thought, should I escalate? No. So I didn't do that. But actually, we ended up doing business with another company. It wasn't as good, but it worked.
Yeah, I mean, for a minute there, I was thinking that this sales guy is the smartest person in the world. Actually, making you chase him.
Really good. Yes.
Fear of missing out, kind of an aspect. But the end of the story was that he lost the business. So maybe
I find that right, because the vast majority, when I've been in these situations, they just go, yeah, it's okay. I understand you're busy. Yeah, I understand you. Let's talk now. Yeah, exactly. Yeah.
And by the way, I have the exact same experience. So I've been kind of finding a vendor that, okay, I want to talk to these people, and then I'll kid you not, there's like 3 or 4 connection requests already in my LinkedIn or inbox that I just ignored in the past. So again, for all of you out there reaching out, if and when I ignore you or we ignore you, it doesn't mean that we will never contact you. So that's a lesson learned as well.
But as always, time flies when you're having fun. I think we use that phrase in every episode now, Ville. And it is true. Time is running out. But I've got one question actually to both of you, sitting as recovering bankers or actual bankers at the moment. Very often from consulting organizations, and you maybe feel this a little bit, Ewan, as well. There is always a fine balance between what we would call free consulting versus actually something that turns into something billable, right?
Yes.
And I very often get into this discussion, particularly with sales guys that say, no, we've given them way too many free briefing sessions and education sessions and everything else. We don't want to give away even more consulting. How would you advise the fintechs and the consulting houses on how to manage this dynamic? Maybe we start with you, Ville.
That's a tough question out of the blue, by the way.
Yeah.
So how should I put this? So I've been on the consulting side of this conversation as well, and I've been on the receiving side on this, both at a vendor and at the bank. And I don't really have a good, clear answer for you that will actually help the audience here, but I can just reflect on how these things worked out. The way I feel that, I mean, a lot of these consultant companies do this. So what they do is they call you up and they say, can we have a meeting? And then when you accept it because the brand is great, whatever, then the ones that kind of give you kind of a very, very generic market overview, and then in the end they say, okay, we can continue this discussion for this price tag. Those rarely actually work out. The ones that do resonate with me, and I guess in the organizations that I've been working with as well, is that when it's enough, it's basically personalized enough for you when you are listening to that. So they are not only did a kind of a find and replace the company name in the presentation, but they actually took time to understand your situation, your specific problems, more specifically, who are they talking to? It's very different if you're talking to the CFO or the CTO of the bank or the institution you're trying to sell to. So again, understanding, really taking a few hours of time to actually understand the position of the person you're talking to, and then doing that presentation or that briefing that will hopefully be of some value to the person listening to it. And then you can move on to say that, look, I mean, we also need to get paid, and, yada, yada, yada. And of course, the other side will also understand that there is no free lunch in that perspective. But again, in order to get that door open, you need to give that kind of a perspective that you understand and you have something to contribute into this conversation.
Ewan?
Yeah, if I build on what you're saying, Ville, because I fully agree with you. I think, Paul, I think any dialogue is good dialogue. But any conversation is good. And I think keeping the door open, especially as a consulting organization, but certainly as a fintech, anything that opens the door and keeps the door moving, keeps the door open on a regular basis, keeps the conversation moving, I think that's valuable. I think you're right that there can come a time when it may look as though it's a request for a free lunch. I don't think that's, you do need to be strong and say, no, look, sorry, this is a little too much. We would need to charge you for the next session. But I think most organizations do understand that. I think, but the key is that ongoing dialogue. Because even when you're in the room, you're creating relationships, right? And yes, you may not be being paid now, but at least you've got that dialogue. At least you've got some connectivity going. You are demonstrating your intellect, your capability with them. I think as long you certainly need to do the find and replace, right? And make it, give half an hour's worth of attention to the presentation before you bring it in. But I think always having that dialogue is really important.
Fantastic.
I do one more point is that I see a lot of these consultant companies, basically what they do is they give you this free briefing, like I mentioned. It might actually be even of good quality. And then they come with okay, but now I expect you to pay for this. And then they're kind of very, very pushy on achieving that kind of deal immediately. So again, understanding when you do that briefing, it is an investment for you for a longer term relationship, because the timing rarely works on your kind of favor as a vendor. It's almost never the right time. It's almost like a lottery. So you might be exactly at the right time at the right position, but mostly you are not. So again,
super point, Ville. Yeah, you're reminding me there, right? Because a really important aspect is you may be hoping, you as the consultancy are hoping, okay, now I've told them this, and now hopefully they'll buy that. But actually, what you're doing is you are also creating the dialogue, that conversation, and be open to Ville saying, actually, no, we don't need that. But what we do need, right, and that's the power. So if you've got that that ongoing conversation, you may want to suggest a piece of work, but it can be very exciting when the target says, no, no, thank you, but actually I need this. Great.
Fantastic. We have come to the end of another joyful episode. Really good discussions. I'm wondering, Ewan, is there any last final thing that you were really hoping we'd cover today and we didn't?
Well, what about the crappy joke?
Yeah.
What about the crappy joke?
Yes, you're right. You're right. We got so excited here, and normally I do the joke at the end. Ville does it at the beginning, but I got so excited I forgot about it. My God! Yes.
Am I allowed to do my ultra crappy? You've heard it 9 times in the last.
You must do your joke. Go for it.
Bankers are great at staying balanced. There you go. Right, sorry. Right. I was gonna go with I used to be a banker, but I lost interest. But come on, that's top of Google, right?
Yeah, I think we got that already 2 or 3 times.
That's why. There you go. Sorry, there's my crappy joke.
That was a fantastically good joke.
Good
Thank
job.
you very much. And with that, Ewan, how can people reach out and continue the discussion with you if they want more?
Hammer me on LinkedIn. You were saying on Fintech Daydreaming, and you please LinkedIn. I'm Ewan EWAN MacLeod, MacLeod MacLeod at LinkedIn. Just Google me there. Thank you guys. It's been a wonderful opportunity to talk with you again.
You too.
It's been fantastic. Thank you very much, Ewan, for joining us. Thank you, all you listeners out there, for having listened to us. If you like this episode and you really like what we're doing, then do us a favor. Share the podcast with 2 of your friends. Just 2 friends, 2 contacts. Because as we grow, Ville and I get more excited. We want to share more and get more guests on. So please, hit the subscribe button, hit the like button, leave us a comment. And until next time, this has been Fintech Daydreaming.
This is Fintech Daydreaming.